Let's bring in John Belton. He's a portfolio manager at Gabelli Funds. Microsoft, Meta, Alphabet, Apple are all top 10 holdings in his growth fund. It's great to have you here. And when other people talk about whether we're going to rotate out of big tech, it's like existential for you because this is your whole portfolio. So just on Alphabet specifically, what do you make of the market's reaction?
Well, I actually think the market's reaction today is it's not that exciting. It comes down to margins, I think. Alphabet's a stock that tends to trade pretty sensitively to how they do on margins and profitability. It's a company that doesn't provide a lot of investor outreach, and I think changes in margins can really swing the stock, and they kind of missed on margins last night. They also provided an initial 2025 CapEx outlook, which was quite a bit ahead of where the street is. So I think this combination of softer margins and higher investment, the market's not liking that today.
It makes it clear that this is a company in transition, right? I mean, the reason why people loved the profit margins was because they just printed money from the internet business where you search for something, you get 10 links, tons of ads, and that was a high margin business. How high were margins at the peak?
Well, back to your comment on the company in transition, I think that's the other key. Sorry to divert the conversation here, but I think this is AI is really driving a big transition for this company. And specifically at their core search business, I think there's been a question of how does search fare in a world of generative AI?
Absolutely.
What does search look like many years from now? Because for a long time, investors viewed search as sort of a utility on the internet, something that was always going to be around. A lot of people were always going to use it. AI comes along, people find themselves using chatbots more and more. Search becomes a little bit less important. So we're at this kind of inflection point for Google search. Now, what they're doing with AI in search is this thing called AI search overviews.
Right, which I love using, but I noticed there's no ads there.
Well, that's actually not totally true. They are starting to monetize that. And one of the key things they said last night on the earnings call was they're monetizing AI search overviews at parity with core search, which I think was really important data point. Like you, I like using AI search overviews as well. I mean, I noticed the other day, I Google searched, how bad are the New York Giants? And Google search.
I don't know why you had to Google that. We all kind of know, but
well, actually, AI overviews gave a nice kind of context. It said, this year they were bad, but they might not be bad in the future. So I think it's actually...
so now it's predicting for you what it thinks might happen.
It's a helpful tool. It gives more context. And what Google's saying last night is AI overviews are driving more queries. So if it's driving more queries, more engagement, and monetization is at par with the core, I think that's a decent recipe going forward, particularly for a stock trading at a valuation that suggests that the market thinks this is a loser in AI.
All of which is to say, it sounds like you're unflummoxed by the dip and would even be a buyer here. But I would also wonder if the company, like you said, they haven't had to say a lot to investors in the past. It's a pretty straightforward business. It's a great one of the greatest that's ever existed. Do they need to talk more now about this transition and maybe talk about those margins, whatever might happen in the near term, talk about the investment, again, with an eye towards, okay, maybe 5 or 8 years from now, we can come out in as solid position as we were once in, because in our house, we're using a ton of other products. I still Google things, but I use a lot of other products as well. I do also use Gemini, and we do pay for that, but I don't know for how long that might be the case.
Yeah, so I think the key there is there's a new CFO. She joined this summer, I think in August. And the previous CFO had started this initiative of durably re-engineering the cost base. I think that's what got a lot of investors excited about Google last year. On the back of that, Google expanded EBIT margins by over 400 basis points last year. I think that was the reason Google was a pretty good stock last year.
That was under Ruth Porat.
That was under Ruth Porat. This new CFO came in from Eli Lilly, great reputation. I think last earnings call 3 months ago was her first call, and there was a lot of investor excitement that she was going to at least continue the work that Ruth started, if not kind of accelerate it. I didn't hear a lot incremental from her last night on that front. So I would like to hear more from her about sort of commitment to cost controls.
But
again, it's sort of like a miss on margins, a big CapEx guide, not a lot of comfort coming from the new CFO. I think that's sort of the recipe today.